guys, welcome back to my YouTube channel. So this week has been a really intense week. The markets are ending much lower, but before I sort of talk about the markets, I wanted to give a brief update, a quick update of what happened in this past week with the Federal Reserve. I think the thesis behind it and the videos I've been making about recession and stuff like that really plays a big part with what actually happened this week. So I thought I'd definitely share that update with you. So on Wednesday, the Federal Reserve had a meeting, and Jerome Powell said that he is not going to raise any rate in that decision meeting, which was expected by the market. But the biggest surprise was that he was completely dovish throughout the entire year, i.e. he's saying that he's not going to raise rates, or the Federal Reserve is not going to raise rates for the rest of the year. Now initially that worked out well for the market, because the market saw that as a sign of, oh well, okay, there's no interest rate hike. But then you have to be somebody who smells or sees past the bullshit. He, on one hand, he is claiming that the market is so strong, the economy is good. It's showing signs of slowdown, he says, admittedly, but he goes that there, it's signs of that the economy is strong and everything like that. So on the back of that, the markets then. So we're looking at 20th of March, right? So on the back of that, the markets did rally. So if I just quickly show you. So on the back of that, that's the initial spike that we had got from that meeting. And then obviously we've raised the gains by the end of the week. But the idea being is that you have to smell or sense past the rubbish that he's saying. On one hand, he is saying, look, the economy is strong, it's slowing down, showing signs of slow down, but it's actually relatively still very strong. But then if that is the case, then why are you completely pausing a rate? A rate decision might be not this quarter, maybe not next one, but why are you completely pausing it? So that's something to think about. I wouldn't interpret that as good news for the market, that there's no rate cut at rate increase this year at all. More importantly, what makes it worse is the fact that future traders, this is on the Bloomberg terminal in fact, and they've also obviously reported on CNBC, but on the terminal is quite good. It shows you the predictions on what future traders are predicting, or what the market essentially is pricing in for the next meetings, of when the next future rate hike or cut will be. And now the market sees nearly a 50% chance of a rate cut by end of January 2020. So the Federal Reserve is basically acting as if there's a recession coming. Hence why the idea of it being able to, that the market is pricing in a potential rate cut. And so it's a complete turnaround in the market, where you were getting, a tightening happening, and now it's completely stopped. So you got no rate hikes the rest of this year, potential rate cut in the start of next year, and quantitative tightening, which is meant to be where the Federal Reserve is offloading off its balance sheet, is completely stopping by September. So it's just all the signs are going in the direction of that the Federal Reserve, they're trying to keep the market propped up as long as they could, or as long as they can, because they know a recession is sort of imminent in terms of the way the slowdown is going. So they're trying their best not to allow it to happen sooner, but the idea is you can't stop something for what's going to happen. It's inevitable, and that's why you have to smell past the rubbish. And I thought I'll make this video because I've been talking about recession looming and coming and stuff like that. So these are the reasons why I'm saying that. And obviously this week has turned out to be a good week for me, because the markets are now lower this week. And more importantly is that I'm guessing that the market is understanding that the Federal Reserve is just chatting rubbish to us, because obviously the markets have now raised all the gains that initially it got from the no rate hike decision. And more importantly, it's down a lot further, especially on today, which is a Friday, and it's crazy today. So I thought I'd make that update for you guys, and hopefully you understand sort of the logic and the reasoning behind the decisions I'm making. Again, that doesn't mean you just go out full out short in the market, but it's just an idea for you to understand that, look, if you were someone who bought when the 20% dip, you can now start taking off some profits, and it will be good to do so, and potentially be a bit more in cash, maybe a little bit in short, or sort of reposition effectively. And I hope you guys enjoyed this video, and see you guys in the next one.